Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Happy Tuesday to you. Hope you're having a fantastic day to you and your family, of course. We're going to take a look at Bitcoin once more, kind of see what's going on here today. It's nice to have a little bit of green. It's not phenomenal, but 2%, I think it was upwards of 3.5% at its highest. That's actually pretty nice. Look at the market, all green here today. So a lot of recovery is kind of cool to see. Dollar index is down a little bit, and of course, traditional markets kind of drawn dead, but that's fairly standard considering the overall market. So basically at this point, what we're going to look at is some Fibonacci retracement levels and kind of identify if there's any proof from the pudding, so to speak, as to why the price will go up or go down. Perhaps that could very well happen too. We haven't essentially broken through this channel yet, and I want to explain that as well. So if you are new to the channel, just bear in mind, I'm not a financial advisor. Love teaching people to trade. Truly hope you can learn something here today. If you want to learn a heck of a lot more, cryptocash.tech is a site. Talking is hard, where you can effectively learn to become a better trader. I have a trading academy, community, and of course signals that I send out for my community. You have awesome traders here. Some are going balls to the wall with 125x through Bitget. Others are keeping it conservative at I think 20x, which I'd recommend probably as a good starting point. Some of my experienced traders are trading at about 35x, some healthy gains here recently, but we're all doing fantastic as a community. And yesterday we did take some healthy profits as well, 33% for our second target for Bitcoin in under 24 hours. And obviously, if we take a look at ETH, it took us 12 hours to get 60%. So those are awesome little things that kind of come as a bonus, you could say, through my trading community / signals. So be sure to check that out in your own time. Also, of course, use this link in the description below for Bitget to register. You will need a VPN, of course, for it, but it's totally worth it. You get a $10,000 prize pool monthly. All of my members are benefiting greatly from that service, and there's an awesome exchange. There's no other way around it. But again, you get 3 months free if you use my link for ExpressVPN. We have another partnership with them, and obviously if you want to use Cornix as well, a 10% off discount there as well. We just partnered with them last night. So good stuff coming here for the community. So with Bitcoin, all that being said, we've got a green day today. What does that mean for us? Is that going to sustain? Well, we'll find out here in just a moment if that does, okay? And what we're going to look at is some key levels, of course, and just some other standard stuff as well. We've already identified dollar index is down, Bitcoin is up. That makes sense. It doesn't have to work out that way. It doesn't always work out that way, but commonly you'll see that theme. So that's a good sign. What we want to look at here, though, is some traditional indicators. So again, most of the indicators that I use, they're more standardized. They are things that have been used for years. They're not these randomly weird, unique ones that are created every other day. Don't get me wrong. Not to say those are bad. It's just that a lot of times, the industry leaders are trading with these standard indicators, and I think it's good to learn how the basics work with trading and keep it simple. That being said, you can see our RSI right at 50 there. We're approaching 50, so to speak. So again, another couple of days, if we break below, or correction, break above 16,900 and we close above that level for a couple of days, our RSI will get back up over 50 and we'll be on the right side of the tracks. But we're still, and should still, expect that to be a resistance level. So it does imply the 16,900 as well as 17,200 is essentially that little channel that we could experience some resistance. Okay, we break through this little channel, though, we should be on the home stretch and be able to kind of break above. Not saying we're bullish whatsoever because of that, but we're breaking this range-bound activity, and that's an important thing. And we can see this here as well. We're tentatively diverging on the MACD, but as you can see here so far today, again, this day isn't over yet. You can see this guy is higher than the previous. Okay, so that's a good sign. When it's starting to slope up, that kind of gives you the anticipation that we're losing that momentum to the downside, and that's positive. Okay, so those are really good things. The only thing else that I think is disadvantageous, once more, just to kind of reiterate, is just the simple fact that we're stuck below both moving averages, the 50 and the 20. The 20 isn't as significant, but you can see the candle wick comes up here perfectly to that level. It's super common for that to happen for a retest of a specific level. Okay, so again, you kind of saw it happen here previously. If you take a look at the 50, you can see the price action comes up, breaks through, comes back down instantly. 2 days in a row, we had that CPI data and FOMC right there. Okay, but again, strong correction makes perfect sense considering the circumstances, because the reality sets in, hey, our prices are overextended, and of course the market's going down, and that's right, we're still experiencing inflation. We're just kind of desensitized to it. So that's why the price came up and immediately came down. That being said, though, we're getting rejected by both moving averages tentatively, but the great news is the 50 is working its way down fairly aggressively. So with that being said, the price action, albeit just say going sideways, will effectively become above that level, and then we'll be good to go. And when I say good to go, it just means that we're tentatively bullish. We're not officially bullish until we break above the 200, which is quite a ways away. Okay, 200 is still up at 20,000, which I don't think we're going to see that for some time. Just me being realistic with you, I don't think we should expect that immediately. I'd love to eat my words and be wrong and the price goes up to 20,000, but I just don't think it's in the cards yet. That said, there's a lot of money to be made in these ranges that we're working within. So let's take a look at those ranges. The 4 hour, we can kind of see here, we're stuck in this range for the weekend, plus yesterday, earlier in the day, early on the trader day, the price is starting to go down. And then of course it comes down, wicks all the way down. We took entry here, right in the 16,600 range. And then of course the price comes back up. Now, again, the reason why I felt that was a comfortable transition is because this support level here at 16,600 is held fairly well, and it proved to hold also very well too, even though we got a candle wick down here. Unfortunately, our second entry was at 16,200. We missed it by like $50, but regardless, we still took some healthy profits. It would have been healthier had we taken that second target. But again, that's the risk that you run with having multiple entry targets. But it's also a safer approach in this market because we don't truly know if the price is going to drop or if it's going to shoot up. Again, it's working within these channels, but you can see here pretty clear as day, this resistance level here at about 16,900. So right now we're range bound between 16.6 and 16.9, okay? Still the case. Even though, yes, it wicked down here and kind of closed down below for a few hours, it still is effectively holding this range. So what we want to see is the price to break above here and to continue higher. Good news is we're above the 200 and the 20-day set moving average, so those are both positive there. In that sense, that could effectively just drive the price action up slowly, okay? So again, that's definitely good. Not phenomenal, but definitely good. Another thing that's positive, we're tentatively above 50 on the RSI as well. So that kind of reiterates that we have that little support level here with the 200. Furthermore, we are also converging on the MACD. Got a nice little bounce or a little jump, so to speak. Even though it's plateauing, so to say, it's still a positive sign. Okay, so we can extract from the daily and the 4 hour, there's more positive than negative. Okay, and that's a good sign. Now, do we have confirmation? Let's go ahead and find out. To me, again, confirmation comes from a lot of little things. We're building this profile of confirmation, right? But the thing kind of icing on the cake for me is, overextension and the cloud. And those are things that I find to be the most effective on the 1 hour. You can still see overextension on the 4 hour. It's just that it's obvious that we're not overextended yet. So there's more room to run, right? We got probably about 20 hours of continuation to the upside as a likelihood. When we look at the 1 hour, however, we can see here on Tidy Sequential, we came down, got overextended. Obviously, this shouldn't have happened, but it did. That's cryptocurrency for you. This is essentially a liquidation hunt. A lot of traders will do that. Experienced traders with a lot of money. The industry leaders are doing that. So anyways, they'll liquidate you, liquidate a lot of longs here, and then they'll turn around, shoot the price up, and then these late longs here sometimes get struck out when the price comes back down. Again, that doesn't necessarily happen because if you see here, we've got an 8 on TD sequential, the price action comes up, it's overextended at that point. There's two things that can happen. It'll consolidate and go down, or consolidate and inevitably come up. We had this attempt to break through this resistance level when the market opened, obviously because of the fact that dollar index was down and the price shot up a little bit. Got rejected there. We're going to potentially either retest that level or come down to bounce off 16.6 and try again. There's a great chance we're going to probably see this continue to get retested and the price come up here. And that would make perfect sense because we'd see a nice little short squeeze there, and it just makes sense considering how overextended to the downside we are in the overall sense of things. We probably shouldn't have came down this low, honestly, after such a sweet rally going into the market. Some of those market reveals with the percentage, and CPI data was positive, of course, but that's neither here nor there. Also, future reference, if you want to have access to my fundamentals, we do have a fundamental section here with tons of news updates. We post that weekly. Okay, so again, familiarize yourself with that if you're part of the community. If you're not part of the community, just another added bonus, right? So that being said, though, we take a look at all this. We're potentially overextended, but we've had enough time to consolidate at this level. So that means we shouldn't experience a dramatic pullback. The likelihood of a retest to the upside makes more sense. Okay. Furthermore, I'm willing to speculate we're above the cloud now, which we are. And keep in mind, this is range-bound activity, so it doesn't necessarily mean that we are 100% good to go, but it does imply that us being above the cloud is a positive sign. We are also conversion line above the baseline, which implies that we have momentum to the upside. Furthermore, the lagging span is currently free and clear of price action. So if the price doesn't break through this level here, just say in the next, it looks like maybe close to about 8 hours, then the lagging span would be intersecting with the price action, and that would essentially give us a signal to potentially close our long positions or take some profit. That's how it works. Now, I've got an Ichimoku Cloud video if you want to reference that. It's in my library. But for lack of better terms, that's kind of what we're looking at here. Mostly positive once more. Okay, so every time frame is giving us more bullish signs than bearish signs, right? Again, doesn't mean we're going to break 20,000 and get right through that 200-day SMA on the daily. It just implies we're going to probably see this resistance level here at 16.9 broken in the relative near future. We're likely going to hit at least our third profit target on both our Ethereum and Bitcoin trades and essentially continue further, right? So again, very positive, mostly good stuff here from Bitcoin. So to me, I foresee the next few days being likely green. But again, cryptocurrency is never something that's foolproof, right? So you always got to protect yourself, work within your risk tolerance, make sure that you are being the best trader you can by not just going willy-nilly and just, going all in every trade. That's terrible. We use maybe 5% of our position size on our leverage trades, maybe you just say 10% for our spot trades, to essentially ensure that we're always staying in the game. Okay, so again, it's more so about survival right now. If people are trying to get you to take massive risks, you're doing it wrong. You shouldn't, yes, risk tolerance is part of trading. Don't get me wrong, you're risking every time you trade, but it shouldn't feel uncomfortable when you do it, right? If you're like, man, I sure hope I flip this coin, it lands on a heads, that's not the right way to go. This is not gambling. You can effectively trade the right way if you follow the right strategies. And we have good strategies in place right now as a community, and we all band together. I freaking love it. So thank you all so much for just being amazing parts of my life. You want to become, again, a better trader, cryptocash.tech is a site. Link down below. We'll look forward to working with you. Hope you have a great rest of your day. Thank you.